All right.
It looks good, Tom. Do you guys want to unmute Tom?
Yeah, we could unmute him.
Mute.
There you go. Hey, Tom, you there?
I'm there. Hey, Fausto.
Tom, what's going on? How you been?
I'm great. I'm great. Alive and well, and I'm a shut-in.
Oh, thank God. My God, it's been great. You know, so before we get started, everybody, just a quick little intro. I know Tom for close to almost, I don't know, maybe 2 decades, probably. It's got to be almost 20 years now, probably. Time flies to all these years. And one thing that great traders always surround themselves with good traders. They're very good at certain things at what they do. And it's just great to still have Tom's doing what he's doing, running a great show on Tasty Trade. And now he's got his own new platform. We're going to talk a little bit about it. But with that said, Tom, I mean, I guess one of my students said that one of the best lines I thought about 2020. I keep on saying, Tom, I says, you know what? I just want to get rid of 2020. 2020 has obviously been probably the most craziest between hurricanes, fires, COVID, the crash, everything. And then one of my students says, Fausto, I thought it was probably the greatest year ever because if you give me another market like this, and I'll take this every year. I just wonder what's your thoughts on that.
Well, I loved the market this whole year except March, April, because that was a really tough. That was kind of weird and crazy, and if you were short, you covered too early and got long. If you were long, you got killed and sold out too early. I thought March and April that move was like an extreme, but other than March or April, the heightened volatility for the whole rest of the summer and all of the strange different sectors and the rally in the face of everything that was going on, it's all pretty interesting. I agree. Like I don't think my case for humanity outweighs my case for great volatility, but so I would prefer that humanity doesn't have to deal with another pandemic. But as far as trading goes, I think if you take out 1 month or it was a pretty spectacular year in the sense if you're talking about opportunity. Yeah, I agree with you.
Yeah, that was probably that March. I got to confess, I was moving money from one bank to another bank. So the only safest way that I like to do it is I cashed out of all my positions, and then I moved my cash into another account. And this was my long term swing accounts. And once I got into my cash, the market started getting look like I was going to be able to buy things a little cheaper. I went long and um I basically my account dropped probably like maybe 40% in about a month. And I
Yeah.
looked like I almost had a heart attack. I'm like, and I mean, listen, we've been through some of the worst of the worst. I mean, we've been through the internet bubble, the financial crisis, Hurricane Sandy, 9/11. I mean, you said it. But like you just said, you just didn't know when the bottom was the bottom. And I remember I posted a Instagram photo of when the market was down 3,000 points. It closed in one day, and it was just unheard of. But I was able to average down. I was able to make it back, and I actually now I think I'm up like 40% on the year on that same account that I was down. But it was but you said it, like if we caught it right there, and you can't ever call that out because I was buying. I thought Boeing was a screaming buy at 180, you know, and then I sold it at 150 and ran to 110. I mean, like the thing was like a 350, but
Yeah,
it's
it's
lesson learned.
I hear you. I hear you. I mean, I sold the 65 puts in Boeing when it got down to 90, and I lost money on them. I mean, I sold the plain 65 puts at like $7 or something and lost money on them. That's how crazy, the vol was. But there were two times in my entire career. One was 1987, and I know you're too young for this, but where I was worried that the banks that were clearing the trades and holding our assets weren't going to reopen. In Chicago, everybody kept their money at Continental Bank. They held all the money for the clearing firms, and I was worried that the day after the crash in 1987 on October 20th, that the banks were not going to, that they were going to default, and Continental Bank was going to default, and we were all going to lose all our money. And then in 2008, the end of 2008, it was pretty scary. I never felt that way. Like I felt in the end of 2008 that there was a real risk to financial collapse in the system. I never felt that way in 2020. I felt the volatility in 2020 was extraordinary and something like we had never seen before, but I never felt like there was a risk of the system imploding, because I felt like it was, the pandemic was binary in a certain sense. So I never felt that same feeling I felt in 2008 or in 1987.
That's exactly what happened to me, like in 2000. Just like what you went through, that was like my biggest financial crisis I ever went to. And someone says, if you could survive that, you could survive anything. And like you said, I mean, we just know that it's got to come back eventually. The question is that what we were trying to do is just trying to find the bottom. And it's just like, you didn't know how much lower this thing could go. And we never experienced a pandemic before. We know how serious this was, people dying left and right and everything. But but look where we are now. We're almost at 30,000 on the Dow, which is unreal, which is almost right back to where we were in February. So
yeah, amazing.
Yeah, it's amazing. But with that, I mean, Tom, I mean, listen, we all have, I have students ask me this all the time, and I got a bunch of questions, when we get towards the end, after you showed show everybody the new features on the platform and, a couple of new options, plays that are going on. But, I mean, what do you expect now? I mean, now that now the election's over, now you got to worry about what's going to happen with the Senate. I mean, because I think that could be a big swing in the market. Where do you think we go from here?
Well, it's weird. So I felt pretty strongly about this, and I've been very vocal. I felt that going into the election with all the uncertainty and all the fear out there, that the greatest opportunity we had seen in a long time from a binary standpoint, which means I felt that the levels of volatility were unsustainable, and the greatest opportunity was to be short volatility going into the election. And it kind of worked out that way. I didn't see how there could be a surprise. I really didn't see how there could be a surprise with respect to something weird happening, because everybody was expecting something weird happening. Just like you said, we had a biological pandemic or an endemic, whatever. We had the election, we had earnings, we had no stimulus action. It was all out there. It was a wall of worry, and the market did kind of what we thought it would do, which is absolutely nothing, except it rallied. The rally was greater than I thought, but the volatility didn't do anything. Now I'm a little concerned, because now I feel like the only thing that's left out there that's an unknown is a stimulus package. And I feel like that's a given. It's just the quantity is, who knows? So I feel like with everything, there's a lot of complacency today in the markets that we didn't have, just a month or two ago. A lot of complacency. So we've basically, volatility's dropped, almost 30%. And which means you've taken 1/3 the risk, 1/3 of the expected move, 1/3 of the uncertainty out of the marketplace, which makes it a very different and it's a much different market from a tradability standpoint. And so I would expect that now I'm a little more concerned just about, not directionally, not like thinking we're going to explode up or crash down, but I'm just a little bit more concerned about the stability of all the markets than I was just a couple of weeks ago prior to the election.
Yeah. With that said, Tom, I had, that's funny you bring that up, but I had a student that actually had a question that did get emailed to me, and which this is like something out of left field, but Mike from California emailed me, and because I was asking people questions, and he asked me that now with the Biden election, one of the big things I think he said, depending on who's going to put on his finance committee, but there's this rumor going around that they want to raise taxes and they're going to go after Wall Street, and they were talking about raising a fee per every transaction that you do, that means it could raise rates to like almost like 50%, like almost 50 times what you're paying now. Do you think that's going to really come to fruition? Did you hear anything about that? You know what I'm talking about?
Well, they've been talking about a transaction tax for many, many years, and they have a transaction tax in different places around the world. I think if depending on there's a couple of different potential outcomes here. If the Senate is locked and / blocked, there will be no chance of a transaction tax going through. I just don't see it happening. I do think that there's going to be a lot of pressure on this administration to, obviously find money somewhere. And the easy answer is, well, you just throw a transaction tax out there. As somebody who's in this industry and who's somebody who trades a lot, I think it would be really, really a bad move, and it'd be in some ways disastrous. I mean, of course, we'll get around that if it happens, but it's a huge mistake, but not for the reasons that everybody. I don't think it's for the reasons everybody else thinks. It's, for me, the problem with it is it's a liquidity drain, and if you want to be the center of true economic development, the wonderful thing about America is that in the U.S. we are the money center of the world. We are the place where the world comes to seek investment, whether it's going public, whether it's private equity, whatever it is, whether it's debt. We are where the world comes for a gigantic pool of liquidity to fund, innovative and creative ideas. That's why, except for a couple of really huge Chinese companies that have done well, mostly all of the quote unicorns and all of the kind of the digital monopolies, they all started here and they continue to start here. And most of the new explosive companies are all US based. And that's because we have the flow of money. We have the flow of liquidity. It would be crazy from a long-term economic perspective to run the risk of jeopardizing the pool of liquidity and the flow of money because you suck out liquidity with horrible things like, idiotic transaction tax. Now, that said, I'm all for, I'm all for a fair tax on corporations. I'm all for a fair tax on wealthy individuals. I'm not opposed to people paying their fair share. I think a transaction tax would be a monster mistake.
No, I know, because they look at it. How many transactions are traded a day on the exchanges?
I don't know the actual number of transactions. I can tell you that last Monday, so a week ago yesterday, it was the busiest day ever in the world of options and I believe in futures as well, but I can tell you options for sure. So in the derivative world, we traded just under 49 million contracts. Now that's not trades, but I would assume that it's over the course of a day, it's probably, somewhere between 50 and 100 million trades, I'm guessing.
Right. So if they put a $50 transaction on
it's not going to be anything like that. No, it wouldn't be anything like that. But whatever it would be, listen, you know what? It's important to have a balance in Washington where, people can objectively look at things. We're a very divided society right now. It's not a good thing. And we need to be able to talk through things like this because you can be a free market capitalist and also be a social liberal, and there's a lot of, it's crazy to just be on one side of the aisle. And so from my perspective, the transaction tax is a big deal, and hopefully it won't go anywhere. The lobbies are pretty damn strong from the exchanges and from Wall Street, and Wall Street backed Joe Biden in a big way. So I think it's going to be, this was not, Wall Street backed Trump in 2016, and they backed Biden big time in 2020. And they backed Obama in 2008 and 2012. So Wall Street has a history of getting it right. I don't think they made a mistake on this one, with respect to where they committed their dollars to.
Mm-hmm. Okay. All right. So, All right. Well, like I said, that was getting people kind of nervous because the numbers that
It
were
gets
thrown
me
out.
nervous. I own a financial technology company and I own a brokerage firm, and this is my business. This is my life, and I love trading. And so, yeah, it gets me nervous, but we'll be fine. We'll figure it out.
Well, we always find a way. There's always a loophole somewhere.
Yeah, we'll be fine.
So overall, so Tom, tell us a little about anything new that's going on with Tastyworks' new platform.
Sure. Well, thanks everybody for hanging out with us. Hey, Fausto, do you put your video on here?
Yes, we could if you want.
Yeah, I didn't see your video, but I think people like it. There you go.
There you are.
Okay. Are you up? You don't put yours up there? Okay.
No, I do.
Okay. I think it makes it more personal. I like it. So, my name is Tom Sosnoff. If this is your first time with me, great. Thanks. Appreciate you coming out. We love the support and the interest and the engagement, and it's super cool. And if it's your first time with me and Fausto, that's awesome. Like Fausto said, we've been friends. We've been doing stuff together for, almost 2 decades. And since we originally built Thinkorswim years ago, and then obviously Tasty in the last decade. Thinkorswim was the decade from 2000 2010, and then Tasty from 2011 to 2020. And so if it's your first time with us, welcome aboard, and thanks for spending, an hour with us. On the chat today, Fausto, Scott, Ryan, and Chris are on. Those are 3 people that run our trade desk in Chicago. So there's a few hundred people on this chat. So if you have any questions at all, Scott is the CEO, Ryan and Chris run the trade desk, and you're more than welcome to ask them questions about anything. You can ask questions about margin. You can ask questions about fees. You can ask questions about accounts. You can ask questions about strategy. You can ask questions about really risk, anything you want. We're a very transparent company. Nothing's off limits. Fire away. Those 3 guys are on, so Fausto and I can really give you a good talk, and we don't have to sit and watch all the questions and things like that. So just in case you didn't know, Fausto, those 3 guys are on, and they'll answer every question that comes in this afternoon.
No problem.
Okay. And so at Tasty, we've continued to do what we do best, which is gear ourselves up for, a continuation of the growth in the derivative space. I believe, Fausto, that stocks have gotten very expensive, and unless they make stocks more tradable through splits and stuff like that, like you saw NEO this afternoon, last couple of days, has been trading, 300-400 million shares a day because it's a $45 stock. What we need is more $45 stocks.
NEO traded 333 million shares.
Yeah, but we would do that much business with a lot of stocks if they were cheap. You can't trade 300 million shares of Amazon. Nobody's got the money.
Right.
So I think you're going to see a continued move towards a continuation of the move towards people using options and futures and options on futures, and then a little bit of stock trading, obviously, on stocks like on NEO and stuff like that.
Well, let me ask you a question, Tom, regarding about that. Do you find that, because there's another question I came across and someone's asked me this, do you find that people that trade options are causing these stocks go up because they have to cover that option? They have to do good on that option. Some people will buy a big option play, and then obviously they have to cover themselves. Or is it because I'm seeing a shitload of short squeezes going on?
Yeah,
I don't know about you.
No, I don't. I mean, I know I heard that when they said SoftBank was in there buying all those tech stocks and buying, a lot of calls in those tech stocks. But no, I don't believe that this is a gamma generated rally. This is this rally that we've just experienced is a legit move based on people trying to, they're racing what a lot of people believe, Fausto, that there's going to be kind of a economic bomb, but a good kind of a bomb, like an explosion of the day you can get out of the house. The first thing you're going to do is spend some money. You're going to go on a vacation. You're going to buy the things you haven't bought in the last year and a half. You've been saving. You can't spend money right now if you wanted to, So the thought is that there's this kind of economic bomb sitting out there that's just going to blow up, and it's going to be, reflected in stock prices. And I think people are thinking that way, with respect to the markets, and that's why they're buying this up. I think I think originally they looked at the pandemic as a binary event, which means a couple months after it started, okay, we're going to be out of this thing because we'll have a cure, we'll have whatever, it'll go away, we'll have a vaccine. But now I think they look at it as more of a long-term endemic. But at some point, we normalize way more than we are today, and that goes into the stock market and creates a real panic of buying. And so I think that's the reason for the rallies, not option gamma.
I think a lot of the rally that we're having right now is because a lot of people are now working from home. And I remember training a lot of people and says, I want to trade, but I can't. My boss won't let me in the office. I'm working and stuff like that. I want to do it. And I think now people are seeing an opportunity, especially seeing the market goes up and nobody knows what they're doing from home. I mean, I don't know about you, but I've been seeing a big influx of people now that just want to get into this industry. And like anything else, I mean, like it's all supply and demand. Some of these companies probably not even worth what they, how much they're trading at, but just everybody wants to trade. And that's what I'm kind of finding with the whole pandemic and stuff. I mean, what else could you do? Some people lost their jobs or they just want to make a little extra money on the side. So I'm just finding a big,
I mean, listen, bring it on. I think it's the greatest thing ever. I was always wondering, and this is to everybody listening today, I was always wondering what was going to be the event. Like there's no, I felt like for the last, since you and I have known each other and we've bullshitted back and forth for, over dinners or drinks or whatever it is over the years. I always told you that I thought there was going to be this huge, you've heard me preach this. I thought there's going to be this huge move from passive investing to active trading. Mm-hmm. And I've been preaching this for 2 decades. And it's never happened yet because I didn't know what the catalyst was going to be. What was going to be the event to basically move the needle, to move the dial, to push everybody in, to say, hey, you know what? Here's a freaking amazing piece of technology. Here's essentially 0 commissions. Go have some fun and learn how to do stuff. And the pandemic is essentially that trigger, you know?
And I think, amen. I totally agree with it. And who saw that coming?
Well, nobody. You couldn't see a pandemic coming. I was in New York City on March 8th of 2020, and we kind of knew something was going on. And I was there doing the money show or the Traders Expo, and I got home that weekend. And the next day I was quarantined at home. I haven't left since March 9th.
I was there. You just left. I saw you stay. I went there the last day. I says, "Where Tom was? Tom was gone already." And I saw Kim. I was having a long conversation with Kim. If anybody knows the founder.
Yeah, that was my last time on the road. I haven't got a plane since then.
Just got out just in time. And the funny part is, I just came back. I couldn't do the show because I did a cruise. I just came back from Florida, and I was one of the only lucky ones that didn't get caught on that whole cruise type of
situation. You're lucky.
Oh my God. I was in Florida. I came back and it was like February. It was just out of this world. But I think everybody here that's listening has to understand that this is not going to be the last time something's like this is going to happen. Every 8 years, there's always something that's going to trigger a catastrophe. And just unfortunately, I tell everybody, I preach this all the time. Unfortunately, catastrophes make great opportunities for us traders in the industry. You just can't take it personal, because that's how you get yourself hurt.
The whole key, one of the things that we've learned in the last 10 or 11 years, and this has been really important, and I hope everybody listens to this, and it's kind of a mantra of what we do, is the whole concept of trade small, trade often, the law of large numbers. You never really know what's going to happen next. It's way too random an environment, but it's there's a certain level of efficiency around the randomness in the stock market. And because of that level of efficiency, it's also a level playing field. So the concept is trade small, trade often, use things with a little bit of a probabilistic edge, and however you generate that edge, and welcome to the world of self-directed investing. If you're listening to this chat today, you have a huge advantage over the rest of the world, which is going to figure it out over the next decade.
You know what? I preach that. You told me that a long time ago, and I still use the same lines in my same class. Trade small and trade often. If you don't trade, you're never going to learn. But the only way to trade, you got to trade small. I had somebody that was a student, and thank God she got saved a little bit. She had an issue, but I always find and talking about options regarding about. But here's somebody that went into options, just retired, figure like, oh, this has got great. I could buy an expense. I could buy a lot of stock and options. And she had about like, I don't know, 60,000 in her account. She started trading options full bloat. She lost 40,000 like that in a week. And you probably
That's
look at
what
that.
you call trading too big.
Yeah, that's trading too big. That's exactly way too big. I'm like, how the hell did you lose 40,000? She goes, thank God I made back 20 because it came back. So I only lost I only lost 20,000. I'm like, how do you try? I mean, I can't even do that. I mean, I could do that in the stock market, but like,
I can do that in about 5 minutes in the option market. Oh yeah, no, I've been there like 12,000 times. Anyway, so let's talk NEO for a second, okay? And the only reason I want to is because I'm sure you're trading it, and also because it has earnings this afternoon. And so one of the cool things about, do you mind talking about this?
No, go ahead. I mean, we've been trading this damn thing for the past month. And it hasn't stopped. I'm just going crazy that I own that stock at $3 back in May. And it's been driving me nuts. And because I may always make fun of it. I call it copycat Tesla because it's it's a copycat, it's Chinese Tesla. But I'm like, I don't know, maybe people felt like they could have bought this because Tesla's too expensive. But I'm still blown out of my mind because I had like 10,000 shares of the stock.
I love you guys from New York because you and Tony are the same. You found an R in Tesla. I don't know where you found the R, but to every New Yorker, it's a Tesla.
Tesla. Isn't that how you spell it? Tesla.
Yeah, Tesla. It's like a Twizzler.
Twizzler. Coffee.
I drive a Tesla, so I am a huge fan, but of electric cars, and I mean, so you can't talk me out of it. But I sold puts in NEO at $10 when right before in the middle of the pandemic or right before the pandemic, and the stock went down to like 3. And I think I got out of it at like 7. So I lost money on it by selling those puts, which was crazy. Now I've been trading it pretty actively, but I had no position coming in this morning because I took it off yesterday. So what I want to show you is a little bit about how to trade earnings and how to trade around earnings, because I think that'll be a good lesson to talk about today. Is that okay?
Yeah, go ahead. We trade after hours in pre-market all the time, so it works out great.
Okay. Yeah, I'm not going to trade after hours right now, even though it's you can trade it right now. The stock's obviously a couple pennies wide. First thing about NEO is, and it doesn't really matter kind of what it does because it's not that relevant to the story. First thing we look at here is the IV rank, which is 37, which is how we measure implied volatility against itself. What that means is that this December implied volatility here of 145 is at the 37th rank on a scale of 1 to 100, which means it's pretty high on a relative basis. And obviously 145 in implied volatility would be high in any stock, among the highest. You can see the volume right here, 335 million shares today. That's, although it's down from 600 million on Monday, that is less, not this Monday, last Monday. No, maybe it was this Monday. What day is today? Today's Tuesday? No, it was not yesterday. I think it was last week. I think it was Thursday or Friday. I'm not sure what day it did. But NEO has been an insane stock. Here's a chart of NEO just so you can see. So if you've never kind of looked at this, if you've never looked at this company before, this stock has moved. It's had a monster move. This is the move that Fausto was talking about from like, $10, $12 all the way up to 55 was the high around that. And then now it's back at 45. The interesting thing here is that the volume is monstrous at 335 million. So there's no question that this is one of those stocks that we call 4-star liquidity, massive amounts of liquidity, the most liquid underlying that there is today to trade that's a real company with real options, the whole deal. I came in this morning with absolutely zero position. I'm not even a one contract. I took them off, like I said, yesterday, the day before. This is my position going home tonight. And I put these on for earnings and for December. So I have 2 sets of positions here. The November trade with 3 days to go, is a short strangle to take advantage of what we call a binary event, which is earnings. Now, I don't know if the earnings are actually out yet. The stock looks like it's down about $2, but I don't know if that's because the earnings came out or the stock's just down $2. I haven't really looked at it.
No, the earnings look like they came out. It came out and it shot up to like 47, shot all the way down to 42.5, and now it's came back. You know, earnings have definitely some crazy volatility there.
Okay. Well, that's great. So just to show you a couple things, because I think that this is really important for everybody that's kind of watching today. And if you want to take something away and learn something from kind of what we're doing here, this is going to be cool. So a very high V rank, which means it's attractive. Massive amounts of liquidity, totally attractive. Earnings this afternoon, which means it's a binary event. Front month volatility, 262%. You can see in the back month here in January, February, it goes down to about 100, 125. So it's obviously in the stratosphere. This here, this in purple tells you the earnings today. And this move right here, where my cursor is, this is what we call the expected move. So what this platform does is it takes the implied volatility. So it's not just some guesstimate. It takes the implied volatility of the 3 at the money strikes. So this is the at the money right here where my cursor is. So it goes up and down 3 strikes, up and down 3 strikes, takes the implied volatility, computes what we call IVX, which is an implied volatility, VIX style implied volatility, comes out to 262, which means the implied move between now and Friday, based on pure math, there's nothing subjective about this, is $7.64. That is the implied move between now and Friday. So the stock was trading at, 46.59 is where it closed. And it was trading here all day. And the implied move was 7.5. So if it stays within that 7.5 and you sell some premium around earnings, you're going to have a good day. If it goes outside of that, it depends how far outside you go. I went really wide because I didn't want to go crazy. So I went to the 35 put. Where is it? Right here. I sold the 35 put and the 65 call right here. And as you can see, it closed at $1.04. I sold some of this at $1.06, and I sold some of this much lower. Actually, I'm going to tell you exactly. Let me move my face up here. These are the 2 I did. So I sold it at an average of 96 cents today. That's that strangle. It closed at one. Well, it closed actually. I'm using 2 different prices here, but we can say it closed at 104 or 113, depending on which closing price that they use. The point I'm making is that that based on where it marked, it was a small loser for me. Now, based on where the stock is trading right now, that earnings came out, this is going to be 100% winner tomorrow morning. And this is a classic example of a trade where you take a very measured amount of risk. So the expected move is $7.60 between this afternoon and Friday's close. So if you want to know exactly what the expected move was overnight, you take about 85 or 90% of that number. So if you take 90%, let's just say you take 90% of $7.60, the expected move overnight tonight was about $6.90, let's just say, or $7. We'll just round it up. So the expected move is $7. The actual move so far has been $1.50. Anytime you get $1.50 move on a $7 expected move, if you're a premium seller like we did here, it's obviously going to work out. That's the trade you're hoping for. Hey, don't get hit by a bus. But let's take a look at what we did. The stock was trading for 46.5. Right here is where it closed. The expected move is under $7. So if I look at what the puts we sold the 35 puts. Those are $11.50 away. So I basically went 1 3/4 times the expected move out of the money on the put side. On the call side, I sold the 65 calls. Stock was trading for 46.5. So on the call side, I sold the calls that were, let's call them $18 out of the money. They're really $18.50 out of the money. The expected move is $7. So that's almost 3 times the expected move. This is just between now and Friday. Now, so you're saying, well, what are the probability of success on that? Well, to see the probability of success, you have to look at the delta. The delta on the upside on the 65 calls is 9. That means that the probability of those calls going in the money is 9%. And if you add the premium that you bought on top of that, that I collect on top of that, which is about the dollar, the statistical chance of getting to 66 is 8%, which means that trade has a theoretical chance of success of 92% to the upside. To the downside, they have a 13, but if you move it a strike down, it's going to take you to 11. So it's about an 89 or 90% chance. So putting this trade together, because you can't lose both ways, there's somewhere between a 90 and 92% chance of success on the trade. So then why wouldn't everybody do this? And the answer is because you can only make $1 and you can risk theoretically unlimited. So the question becomes in the world of trading, and this is a great example of, where do you want to butter your bread? Do you want to butter your bread where you have unlimited risk and a 92% chance of success? Or do you want to buy these and have unlimited profitability and an 8% chance of success? Now, for me, it's easy because I've been doing this a long time and I want the 92% chance of success and I'll take my chances. And obviously, in this case, it's going to work out. Now, or maybe something crazy happens tonight. I don't know, but so far, so good. In December, we're going to close this up. December is not necessarily an earnings trade, although premium is still going to collapse. We call this a regular trade, but not necessarily a binary event trade. But in December, I sold a strangle as well. I sold the 35 puts, the same put, and I sold the 65 calls right here. And it closed at $6.20. I actually did it at $5.65. They threw a lot of premium into this on the close. So I lost 60 cents on the marks where it marked. Tomorrow, this trade will probably open instead of $6.20. I'm guessing it'll open around $2.50, maybe $3 in that range. So it should be like a $3 winner. But it depends where we open tomorrow. But these are classic examples of what you can do with really cool technology, like at Tastyworks. And remember, at Tastyworks, Fausto, we're not like any other brokerage firm. You can do this in an IRA account. You can do this in any account type we offer. You can trade this way. We don't limit your strategies. We don't tell you have to have a certain amount of money to do certain things. We don't limit the strategies you can do or any of that kind of stuff. You want to sell us a strangle in an IRA account, go right ahead. And you want to do it in a regular margin account, go right ahead. You want a high probability trade. Look at this 65-35. There's about, let's see, there'll be a 23% chance on the upside, and there'll be about a 18% chance on the downside of going in the money. You average those two together. This is an 80-20 trade. 80% chance you make money, 20% chance you lose money, but you have unlimited risk. This is a classic, okay? This just becomes an absolute classic binary event earnings trade on a really cool piece of technology. And again, there's so many other things in here. Well, I probably should, let me go back to that trade for a second. I can show you some other stuff. 65 puts.
But Tom, let me ask you a question regarding that. Are we looking at this because, you're having such great options on it because the stock trade almost
let me show you here. Take a look.
Million shares.
Look at these option volume here. 8,000, 23,000, 12,000, 27,000, 13,000, 32,000, 20,000, 77,000 of these contracts traded. The amount of option volume that traded here today, I can't even tell you the last time I saw any kind of volume like that ever.
Wow.
Yeah, that's why we're talking about it, because when you want to talk about statistically the most liquidity with the highest implied volatility, which remember, so to everybody listening, the beautiful thing about options is they're strategic, right? So Fausto, if you go trade stock, it's very black and white.
Right.
It's binary. It's static, as we say. There's nothing wrong with that. I traded a bunch of stock today. There's nothing wrong with trading stock. But if you do trade stock, you are trading what we call a static or binary instrument. The outcome is very black and white. If you buy it, you want it to go higher. If you sell it, you want it to go lower. There's no other strategic element to it. Like on this platform, if you want to sell NEO, you just click on the bid. And if you want to buy NEO, you just click on the offer. That's all there is to it. Simple as can be. If you want something strategic where you have a higher probability of profit, you have to, with of course more risk, because there's no advantage, there's no theoretical edge whatsoever. So if you want a what we call mechanical edge, or you want a strategic edge, then you have to use options. That's the only difference. Futures are like leveraged stock. They're binary as well. They're static. They have no strategy to them other than black and white. Futures options are, again, strategic. Did that answer your question?
No, it does. It does. Now, what happens if we're looking at a stock that has very low volume?
You as an option trader, you have to stay away. As a stock trader, you might find an occasional stock, like there's some stocks that I've heard you trade in the past, that have, like we would say, they have they have decent stock volume, but no option volume.
No option volume.
Like I wouldn't trade that. You can, but I wouldn't.
Right. Could you bring up one stock that we were trading? You probably know very well, and somebody was asking me if it has the option play, but on Riot, RIOT.
RIOT
on options. That's going on with the volatility on options.
Yeah. So Riot is so first thing is when you get into, so this is a $6 stock, right? Now I know it was up, like $2 today. So it had a huge move. It was a $4 stock coming into today. There's not a lot of option trading. I mean, look at this stock. I mean, it's been staying between $3 and $4 for a long time, right? And it just had a huge move today because, Bitcoin exploded and the whole, everything blockchain today was bid. But when you talk about stocks like Riot, the volume is perfect. It's fine. Tons of volume. The IV rank is great. But if you're going to trade a $4 stock like Riot, the one thing that we would tell you is don't sell calls. Like the only way you sell calls in there is if you buy stock and sell calls, you do covered call. Mm-hmm. Because a covered call in a stock like Riot is just like it's a long-term play. And so we're totally fine with a covered call to the upside. But this is not the kind of stock that we would sell a strangle in. Like I wouldn't sell a put and a call. I would in Riot just sell naked puts. So there's plenty of volume in here to sell naked puts. And if I was trading Riot, like for me today, if you said to me, hey, Tom, I love Riot, I wouldn't buy the stock. I would have sold probably the 5 puts. And I'm guessing this morning they were closer to $2.
Well, because the reason it comes up is that people come up to me and they're day trading and they're like, how do I know when to trade an option? And like, I try to teach them in a way of like, listen, you want to be good trading an option. You want to try a stock that has good volatility in it, but not all stocks have good volatility on an option play.
This stock has plenty of volatility, but if you want to trade options, first you have to make sure the option market's liquid, and then you have to make sure that you understand kind of what you're doing. Like you understand, hey, the IV rank's high, so I can sell a put here. Like if you wanted to trade Riot, and most people probably wanted today, obviously, to trade from the long side. So if you're trading Riot from the long side, the option alternative is to sell the 4, 5, or 6 puts naked. It's just the most important thing to know when you're selling a put to give yourself a synthetic long in the underlying stock is that you look at this delta column here. So if you sold, for example, the 5 puts, for every put you sold, it's the equivalent of 28 shares of stock. So let's just say, like normally, Fausto, let's say you trade 1,000 shares of stock, okay?
Right.
In Riot. So Fausto going to go in, he's going to buy 1,000 shares of stock, and that's the amount. So if the stock goes up $1, you make $1,000.
Right.
In the option world, if you sold a 10 lot of these, if you sold a 10 lot of the 5 puts, which at the time was probably the put to sell, you would be long the equivalent of about 300 shares of stock. So if the stock rallied $1, you'd make $300 because you can convert the delta into a synthetic theoretical number to show you how much actual theoretical stock you'd be long. So you buy 1,000 shares of stock, you make $1,000, the stock rallies a point. You sell an out of the money put, stock rallies a point, you make $300. You need to know that so you can adjust your size and your expectations accordingly.
Right. Could if the volatility dies, like let's say Riot, because it's obviously hasn't really done anything in a while, but if you have a company that trades like, like you have right now is trading 80 million shares and it drops down like, I don't know, 3 days later to like 2-3 million, what would it look like on the option market? Is it going to still, you still have like those orders out there, or the levels are going to be a lot thicker?
It's so interesting that you bring this up, because I know you were busy setting up for today's webinar and you didn't watch the last 5 minutes of our show today, but we did a piece on crude oil. Now, I know you remember back in April when crude oil went negative, right?
That was funny.
Yeah, it was crazy. It was market structure. But listen to this, because this is gonna answer your question. So back in March and April, and before that, crude oil was one of the most actively traded futures in the world. It traded some days 1 million contracts, some days 700,000, 850,000, 900,000. It averaged close to 1 million. We're talking about CL, which is kind of the most actively traded crude oil contract. When crude oil went negative and blew up the space due to the market structure issue in April of 2020, the average daily volume today in crude oil is 300,000 contracts. It's been that way now for 5 or 6 months. Mm-hmm. It totally blew up their market share. People got scared. Firms shut down trading in there. Market makers went out of business. So the answer to your question is yes, a decline in volatility or an event like that, Fausto, will change the perception of the underlying and the amount of trading that goes on.
Yeah. So what? Okay, there you go. That answers your question. Because I always wonder that, because a lot of people always ask me, looking at that, they're like, "What happens if I'm looking at a stock? It's so volatile." Then, because a lot of these stocks that we trade, like I don't know about you, I was getting back to this earlier, but like some of the stocks we're trading, like all of a sudden they just come from nowhere and they start trading this crazy volume, and then all of a sudden they die. I mean, like, I don't know.
Well, you have to be careful. You have to be careful about really inexpensive stocks. I'm not putting Riot in this group, but there are some penny stocks that are real pump and dumps, and you have to be careful about that.
But we don't trade penny stocks. I don't trade any penny stocks.
And nobody should.
No one. I don't trade. I don't preach it. I don't talk about it. And the best way I always tell everyone how to know if you're dealing with a penny stock is when you're looking at, if you don't have any, like we trade on level 3, which we're going to talk about right when we're done, like NASDAQ total view. If you don't see any orders out there on any of the ECNs, it's a penny stock. I just stay away from them.
But if you're trading stocks like Riot or Neo, those are totally fine. And listen, the most important thing to know as a trader, and I'm sure Fausto you get into all this, but it's just you have to look beyond the noise. Like the noise, all you can associate noise with is opportunity. So the more noise, the more opportunity. But you can't get hung up in that noise. Do you know what I'm saying? Like if everybody's out there yakking about how great or how horrible this company is, whatever it is, don't pay it. No, never mind. But the noise itself has a direct relationship with opportunity. So noise equals opportunity. Just don't pay attention to the noise as far as like trying to develop your own thought process. Do your own thing, man. Stand alone. Be your own person. Totally stand alone. Nobody freaking knows. This morning they opened Tesla up at the highs of the day, based on the news that was going in the S&P 500. Today they opened Costco on the high tick of the day. That's what too many people were reading their own press clippings and everything else. And so Costco on the special dividend of $10 opened on the high tick of the day. They both closed, Costco closed, I think, $6 or $7 lower. Tesla closed, $20 lower.
Right.
Just be aware that noise, it's not always right, but it does deliver a very important message, which is there is opportunity behind the noise.
Now, Tom, another question that came up too, and we've been doing this every day. Have you noticed there's a lot of short squeezes going on?
Oh, of course.
Now, what is your interpretation and what is your thoughts on it? Because people always ask me, because I always tell them, listen, just be very careful. Just take the money and run. We love short squeezes, but you're starting to see them. I mean, I'm telling you, I have not seen so many short squeezes out of all the years I've done this in the past 6 months. It's like it doesn't stop. It's like constantly, and they obviously come crashing down. But with your experience, tell everybody, like, because I have the way to explain it. Maybe everybody else wants to hear how you look at it.
Well, I mean, a short squeeze is very hard to. It's the difficult piece about a short squeeze is that like you never really know. Like it's a little like a riptide. You know what a riptide is?
Yeah.
Yeah. So a riptide, like you're swimming in the water, and the next thing you know, you're being taken out to sea.
And
I mean, that's a horrible analogy because I don't want to talk about things that are morbid, things like that. But you're swimming, and then next thing you know, like you can't control it. It's kind of the same thing when you get stuck in the middle of a short squeeze. You're just trading something, and then for some reason that you have no idea what's happening, all of a sudden the stock just goes out of control to the upside. Now, what causes that? Well, it's a combination of factors. It's people selling into the initial move and then being forced to cover. It's people buying into the fact that they know people are being forced to cover. And it's also just people just jumping on the bandwagon because there are some trend traders out there.
That's us.
There's not, there's no statistical proof that any of that has a repeatable function. Like, in other words, there's no statistical proof that any of those things you could point out in advance or you could repeat it by design. But those are all reasons why you'll see, short squeezes. And again, remember, this year we've been in a very emotional marketplace, very emotional. And emotion is something that, markets are short-term emotional. There's nothing you can say other than that.
Do you know anybody that got caught up in the short squeeze, like brokerage firms that went out of business from it? I mean,
I do not know any brokerage firms. I do know that, if we're talking about personal, me, I got killed in that Tesla. When Tesla went from 1,300 to 2,400 in about 5 days, that was
a short squeeze.
Yeah, that was a short squeeze, and that was really painful. There was a short squeeze. It felt like there was a short squeeze in Zoom that was the most brutal short squeeze of the year was in Zoom, when it went from 380 to almost $600 almost overnight, $500 and then virtually, or I'm sorry, 280 to 500. Crazy things like that. So Zoom and Tesla were the two biggest, most public short squeezes I've seen all year. And, to a certain extent, there was a little bit of a short squeeze in Apple after they announced the split. So I'm telling you, man, this has been a crazy year for a very emotional market. Those were hard trades.
Yeah, they are. They're hard. And what I'm finding out now is like they're always constantly getting halted. And then you're in a stock that's halted, and that even freaks you out because you don't know where the hell it's going to open up. But
most of the time they don't halt a stock for buying or selling unless the company says that there is material, non-public information that needs to be disseminated.
No, like, a lot of it's being halted because they're going up too fast. I think it goes up X amount of percentage at a certain period of time.
You're talking about the exchange halts, the circuit breakers.
Exchange halts.
Yeah. That's different. Yeah.
But I'm seeing more and more of that, like every stock that we're in, and it is pretty scary.
Yeah, but, those are exchange circuit breakers. Those are put in place to bring some stability to the marketplace and to attract, people on the other side of the market. That's all.
But everyone has to remember that they only do that during the market hours, because we do a lot of pre-market trading, and what happens, you'll see a lot of these stocks in pre-market and those circuit breakers, because people ask me, why isn't it happening now? Because the market's not open. This is pre-market. Those circuit breakers don't kick off, and that's why those things will take off. But they'll kick in if it was during the market hours.
Yeah, but pre-market's more difficult because you really don't know where to route the orders to, because there's not a primary marketplace. So you're routing to lots of different like ECNs and things like that. So it's tough.
Could you trade pre-market with your platform?
Of course.
Okay,
so
just everyone asks.
We open an hour early. We close an hour later than the cash markets.
There you go.
And we're thinking of extending it, but right now it's an hour earlier, hour later. And then, of course, we offer
8:30, not 8 o'clock Eastern.
Eastern time, we're 7:30 to 8:30.
7:30, 8:30.
I'm sorry, 8:30 to 9:30. I take it back. Eastern time, 8:30 to 9:30.
So
and the cash market's open at 9:30.
So just to let everybody know that for all the students, that's why when we start trading at 7:45, almost 8 o'clock in the morning Eastern time, and there's usually 2 rallies that kick in, and it's pretty cool when you see it. You see it in the trading room, but you see all these orders go crazy at 8 o'clock, and it was like, ooh, you see this thing go wild in the stock, and then you'll see another one at 8:30. That's why for some of you, we say,
yeah, it's a lot of the firms like us will open it at a certain time because we have more vendors that will take the orders. The problem with opening them too early is that you're only limited to a certain number of executing vendors. And so it's really hard to do. But you remember, we also support futures 24/5. So around the clock, 5 days a week from Sunday night to Friday night. So we're always open, but we're just trying to stay in the most liquid, most efficient marketplaces.
So Tom, to wrap it up, I mean, can't believe where time goes. We've already been talking almost an hour now.
I know, it's great.
I mean, I can't wait to see you again and hang out one time. I miss those times. Everyone's
of course, dude, we're getting older, and it's not any fun when you can't hang out with your friends.
I know. I mean, remember all those times hanging out at the W Hotel, and and then
who's going to teach me about Gabagol?
Gabagol. You got Tony still there,
He's not a good teacher.
He's not a good teacher. He's getting to Chicago now. Is that what's happening?
Yeah, he's to Chicago.
He's getting to Chicago. Oh, geez. Can't do that. Well, I mean, so anyway, that was the last day you flew, right? Is that what you're saying? That
was the last time I was on an airplane this year. And I'm somebody that flies, 50 to 70 times a year. So crazy, man.
Yeah. Well, with that, Tom, so I put up a link, everyone, if everyone wants to get a demo or practice the platform, but any last words on the platform you could tell us before we close up? By the way, and after this, everybody, I'm going to be doing an event right after Tom, so don't go anywhere.
So thank you, everybody, for listening. We have 2 new releases coming out on our platform in the next couple of weeks. We're going to be releasing an option tracking functionality called option chains and order chains. And I think you're going to love it. It's super cool. First of its kind in the industry. And also we are launching cash digital assets. So you'll be able to trade Bitcoin and 5 or 6 other coins on the Tastyworks platform. Would be the first major platform to offer, cash digital assets. So you'll have those right from the same interface, same capital, same interface, guaranteed by us. So that's coming too. So there'll be like Tasty crypto. So all that stuff is, we have a brand new charting platform called Tasty Charts, and there's just a bunch of really cool stuff that's being rolled out into the platform. There's a new iPad app coming out in the first quarter of next year. So you're just getting, we are, we build the best technology in all of FinTech, and it's the fastest, most stable platform. And it has just an amazing amount of really simple yet applicable technology. And if you haven't tested out any of the Tasty technology that we built, it's off the charts compared to any other platform. Just faster, more stable, and probably less expensive. But
there's a lot of people here, and they don't realize that. But my students don't be in the trading room. Technology. You're talking about stability. I'll tell you.
We've been a market leader, Fausto, for 2 decades. We built the Thinkorswim platform, and now we built the Tasty platform. Together, those 2 platforms do almost 50% of all the retail business in the world. So, so we've been the market leaders, and if you haven't checked out our stuff, you should. It's just
no reliability, because some of these platforms always crashing. They're
not crashing. Tasty.
I know,
not Tasty. It's just been amazing, stable. It's amazingly stable. So anyway, thank you, everybody, and hopefully Scott, Chris, and Ryan answered all your questions. And Fausto, like always, I can't wait till next time. You're the best, man. Thank you so much.
It's always a pleasure, Tom. Thanks for coming, and be safe. All right, everyone, and happy holidays. All right, everybody. So I'm just take over the screen from here from Tom, and just give me a second right here. Hold on. Share the screen. All right. Can everybody see my screen okay? Just give me a chat back. All right. Perfect. So anyway, that was a great presentation from Tom, and it's always a pleasure having him on. I mean, I know him from so many years, and listen, great traders, we always learn something from each other. If it's options, if it's futures, if it's stocks, if it's cryptocurrency, whatever it is. But the funny thing is, you'll notice that we all have the same mentality when it comes to trading, in a way of we don't get emotional, we don't freak out. We've all been through some type of a catastrophe. And I think the first catastrophe is always our best catastrophe, because we learn from that. And if you could survive that catastrophe like we have right now, you could be a trader for the rest of your life. And now with everything that's going on with today's markets, everybody wants to learn how to trade. Just everybody wants to get into it, and everybody's got to learn. But you have to learn before you can earn. I mean, we do these presentations. We go out there, we try to educate you people. We want you to understand how to play the game, but not only learning how to trade, but you have to surround yourself with good traders. So what I'm going to be doing is I'm going to talk a little bit about NASDAQ Total View. I'm a very, very big fan of it. I mean, with the options that we're trading, a lot of people ask me, how we see those orders. And the thing is, a lot of platforms, certain platforms don't have it. Like Tastyworks does not have it implemented in their platform, use a lot of data. And also because they do charge for it. It's not expensive. It's $15, but you know what? You could trade on the Tastyworks platform, and you could have NASDAQ Total View side by side with it. So I'm going to talk a little bit about that. All right. All right. Now let me just get some few things up here pointed out. There we go. All right. So I'm going to talk about how successfully to use NASDAQ Total View. Now, has anybody here, let me just do a quick poll. Let me do a quick poll right here. All right. Now, does anyone here have level 3? I'm just going to do a quick poll right here. Just you see a little poll coming up on the right-hand side. Let me see if anyone here has it. All right, just answer for just a couple of more seconds. I'm going to share the results. All right, so you could see that there's a lot of people here do not have level 3. So I'm going to share that result. And I know we have a lot of students here from CyberTradingu University because they wanted to hear Tom talk. But I know that those are probably a lot of the yeses, but I can see a lot of people don't have it. So let me tell you why important it is, because what I'm about to show you is about 70% of the volume that trades in today's market. Now, listen to me carefully. 70%. You're going to be able to see mutual funds, hedge funds, institutions, brokerage firms, where they hide their orders and place their orders is something called ECNs. And I live here in New York. I was trained by some of the best traders in the world. I'm one of the original day traders that traded this industry. Actually, if you read the old books, I'm one of the original So's Bandits. And basically how we got into the trading is we started using something called an Instinet machine. Now, Tom also knows what that is. Back then, we had to pay almost $2,000 a month to have that. Now, because the exchanges want to make things very transparent, and I'm not here to give you a whole lesson on why they came out with it, but you're going to see that without this number one tool, it's almost impossible to trade. Now, here at CyberTradingu University, at the end of this presentation, I'm just going to bring this up really quick. On our homepage or our website, you'll see right here, it says NASDAQ Total View. So I've been a regular guest on the NASDAQ before they shut it down with COVID, talking about it. And now NASDAQ wants you to know how to trade an exchange. They want you to know how the market works. And when we're done, we'll play that quick video so everybody can watch it. The last one of that I was there, which was pretty historic because this was right in the middle of the pandemic. This was like the last week. I mean, I remember I couldn't even shake, Jill's hand when I left. She's like, and before it was great because you know how beautiful, if you have been to Times Square, it's just a very iconic view of being on the NASDAQ center. And I was allowed to bring no family, no nothing. And they took it very, very seriously. It was unbelievable. It was one of the last videos that was there that was done. But what we're going to talk about is how we find these stocks, how we trade them, how to actually read level 3. We're going to talk about total view, everything. Now we have some staff here, by the way. If anyone has any questions, I'll try to answer them. But I know it's going to be a long day, and I'm going to basically talk for about 30 minutes, and then I'll try to answer your questions. But we have staff here answering them as you go along. But once again, I've been doing this for a long, long time. I love what I do. And the reason why I got into the trading business is because the only way I could be very successful as a trader is I had to train people to trade like me. So when I left my firm, the only way I could succeed and the way I was taught, is you got to surround yourself with traders. So what I'm looking to do today is at the end of this presentation, I'm going to invite every single one of you to come to my trading room. And I want you to see traders trade live in the market and see what they're doing and what we're buying and what we're selling. See what we look on pre-market, aftermarket. Look how we shadow these dominating big block orders, which we call iceberg orders. I'm going to talk about all that stuff. So every one of you are going to be invited to come and watch us live in the market. So if you want to ask me, hey, Fausto, can I see your trades? Yeah, you will. Guess what? In the trading room. But before I waste your time and my staff's time, let me show you a little bit about it, and then we'll go from there. Now, with the good, the bad, the ugly, please don't look at trading as like, oh, I heard about it. It's very risky. Listen, options is very risky. Futures is very risky. Stock trading is very risky. I personally, like Tom just said earlier, I just like trade stock because it's black and white. It's just right to the point. So listen, you shouldn't, if you don't know about it, you should at least understand what it's all about before you jump to conclusions. Now, I am looking to, like I said, I got 2 families. I've been married for over 20 years now. I got 3 wonderful boys, Alex, Max, and Lucas, my lovely wife, Debbie. You could see there that I don't make girls. My wife always yells at me about that one. But I do have some girls in my trading room. So I'm looking to add people to that second family. And that's what we are. Now, what we're talking about, oops, what happened here? Fausto, you're showing the wrong screen. Okay, hold on one second. That would basically, let me see. All right, is that screen working? Okay. Everybody got the right screen? Better? Okay. Sorry about that. I don't know why I had the wrong screen up and running. All right, so let's start over. So there's the 2 families. There's me working at NASDAQ. There's a front page article of Forbes, bunch of kids tormenting Wall Street. That was me. And those are basically how cyber trading started. All right. Okay. All right. So let's go back. So let's talk about PLTR. Does everybody see PLTR on the screen? Let me bring it. How about now? Does everybody see it now? PLTR? All right. Better? Okay. So, all right. Finally, we got there. All right. So we're looking at PLTR. Did anybody see what was going on PLTR? Did anybody trade it? It was a new IPO. Stock has been having a great run up. Stock went from 16 to 18. Yes, you traded, Norm. Okay, great. Phil, obviously, we all traded. Yes, Grant. It was a great runner. Even today, it had a great run. Beautiful stock, great trending stock. Now, the question is, how did you find it? How did you know it was going up? Why did it continue to go up? Who's running the damn thing up? That's what we're going to show you. I want to explain to you exactly how we find these stocks, how they go up, and what to look for, and most importantly, where to get out. Because trading is not about, learning about the past. It's about predicting the future. You got to remember one thing. You are here for one reason and one reason only, and that is to make money. To make money as a trader, I forgot to ask Tom this question, but, he brought up NEO. And, and the bottom line is like, why did you pick NEO? There's 25,000 stocks. Why did you specifically pick NEO? And I know exactly what he was going to say, because it was the only one out there that I felt that I could risk the least amount of money with the high amount of reward. Remember, I was talking about the stocks, about the big spreads. He's like, he's talking about oil, and he says, yeah, volatility dies out. And, but I love oil. I love oil. Why would I always trade oil. Yeah, but it's not the best trade of the day or every day. Every day there's something new to trade. But how we find stocks like this, just to let you know, is we just work off our big percentage gainers and losers. You got to remember, here at Cyber Trade University, we really don't care what we trade. We just want to make money. Okay. And the number one place that we focus all our trades is we have these scanners and we look in our pre-market scanner and we just look for big percentage gainers and losers. Now, the thing is this, if you look at this list right here, there's a lot of stocks that are moving. Question a lot of people ask, how do you know which one out there is going to give you the least amount of risk with the high amount of reward? That's the model we go by. We don't trade everything. We just need one. And we just want to trade one that's going to give us the tightest spread, the best volatility, the least amount of risk, all to just make our daily goal. That's what day traders look for. So how do we know when to buy and when to sell? When is the right time? Well, this is where most traders fail, okay? They don't know where to get in. They don't know where to get out. They just, oh, it's going up. They jump in, they jump out. They don't know where they're getting it. They don't know how to place limit orders, market orders. They really don't have access to any of that stuff. So like I asked you earlier, do you have total view? And it looks like almost, including the ones that are not sure, which I'll take that as a no, you're talking close to over 70% of you don't have it. Well, guess what? Trading is, believe it or not, is a 70 to 80% failure rate. Why is it a failure rate? Well, first of all, who trained you? Secondly, what are you trading with? Third, who are you trading with? You know? And fourth, what are you trading? You have to understand how to play the game. Now, listen, I'm a big boy. Tom's a big boy. We're all big. We all admit when we're wrong. And you know what? We don't quit. We come back tomorrow and say, it's part of the job. I still have not been a job was all rainbows and puppy dogs. Anybody here have a business? Anybody own a business? Every employee you hire, were they the best of the employees? Every customer that walks in the door, oh, that's the best customer ever. Oh, that's the best customer. You learn how to deal with it. You have goods and you got bads, but you know what? Like, oh, I had to quit, I had to quit my job because I didn't like, I didn't like that person that worked there. So you're going to sit at home. You're in a room with 50 employees because one person, has a different view. All of a sudden you got to quit. What kind of person does that make you? You'll never be able to work in an environment. So guess what? Maybe that job is not for you. Maybe you should own your own business. Maybe you should be on your own boss. Trading's the same exact thing. But to do it, you have to do it right. So let's talk really quick about BookViewer. And then let me show you how the power of it. Now, this is only one book of several of them out there, but this is one of the most popular ones out there. So what you're looking at right here, ladies and gentlemen, is Grant says, but I only pick the best. Grant, you've been around the block a long time. I know that, all those boat dealers that you had, not everybody worked. Not everyone's all rainbows and puppy dogs. So anyway, let's look at this stock right here. Let me get my little pointer so you guys can follow along. Hold on one second. Where's this stupid crayon here? Oh, there it is. All right. You can see my little dot right here. So basically what you have is there are buyers and there are sellers. You're looking at every single buyer that's trading around the world that want to trade OXY. You're looking at every seller out there that's looking to sell OXY at every single price for how many shares and how many orders make up that share. Now, orders could be made up of one person. It could be made up of 5 people, 10 people, 100 people. So you're looking at the raw data of all the orders that are out there, people that are negotiating to buy and sell OXY. Now, how does this help you? Well, you have to understand something. Support and resistance levels are made from buyers and sellers. Now, here at CyberTrading University, I tell everybody this and people freak out, but we don't teach people support and resistance. We teach people where the buyers and sellers are. If you're looking for support and resistance, guess what? You're looking at the past. We're not looking at the past. We're looking at the future. The way you look at the future is you got to see where everybody's out there buying and selling it. You want to know where those big block orders are, because guess what? You can't manipulate the stock, but a guy out there that's looking to buy 55,000 shares at 11.50 and 17 different orders around the world, definitely shows why this stock OXY had a very tough time going past 1150. Not only once, twice, 3, 4, 5 times. And if that didn't explain it to you, then I don't know what else. You see, everybody's always taught support and resistance levels. I mean, that's like kindergarten stuff. But what really makes support levels? I mean, think about it. Who really is making a support level? And wouldn't it be nice to know if that support level is going to exist in the future? Because support levels get broken all the time. How did they get broken? Well, maybe that buyer's not there anymore. And meanwhile, you're looking at something that happened yesterday or a week ago or a month ago, and like, oh, here's my opportunity. I'm finally going to get the stock. That's support. Guess what? But today, that guy's not there. And if he's not there, the stock's going to go lower. And guess what? The same thing goes for stocks that go high. Look at American Airlines. 930 ran from 31 to 34 in a matter of an hour. Big winner. Nice profit, right? But why did it drop back down to 33? Why didn't it go to 35? Why didn't it go to 700? Why did it stop at 34? Who in the right mind prevented this stock from going higher? It wasn't Fausto. It wasn't Tom Sosnoff. It wasn't Mr. Bolger Band. It was this guy right here. Actually, I'm sorry. It's these 39 different people out there that make up 123,000 shares at $34. Now, students, I know we have a lot of students in here today, right? And you guys know that we traded a bunch of stocks today. We traded PLTR. We traded FCell. We traded Riot, right? We traded all these stocks. And what were we noticing? We saw big block orders out there. Remember when I say, hey, that big order was getting executed? PLTR. All of a sudden, if you guys remember, there was a big iceberg order out there. And then all of a sudden, the guy got executed. Thing ran about 50 cents. 50 cents might not sound like a lot to you, but if you own 1,000 shares and it goes 50 cents in, I don't know, 20 minutes, 10 minutes, it's $500, $100,000 salary, 120 to be exact. Who doesn't want that job? You know, it's all about following the money. If you just follow the money, it just makes things that much easier. So let's look at this example. I'm going to do a quick poll right here. Okay, hold on. Stop sharing poll. Now, I want you guys to tell me, is this stock going up or down? I'm just going to do a poll right here. Let's see how you guys answer this question. And by the way, don't be shy, guys. Just answer. No one's going to pick on you. No one's going to make fun of you. If you can't answer this question, I personally would like to tell you should quit trading. Not only you might get it wrong, because there's no reason why you shouldn't answer it. If you don't know how to answer it, you obviously don't understand how trading works. All right. Nick says, I can't wait to see the answers. Okay. Well, I'm going to share the results from you. So it's so weird, but it always falls at 4%. I don't know why, but we had 4% of you say it's going to go up and 96 of you said it's going to go down. Well, guess what? Congratulations. If you said it was going down, you are absolutely correct. I don't understand why people think this is going up. The clear direction of that trend, it's going down. Okay. If you were not kidding around and you were serious, listen, I'm a little brash and I don't have the best bedside manners, but I probably recommend you to quit trading right now. If you really thought the stock was going up, I don't know what made you think it was going up, but it's really going down. Okay. So don't be offended on that. But for the rest of the 96% of you that said it was going up, now the next 64,000 question is this. What is going to make this stock go higher? What do we need for the stock to go up? Let's see how you guys answer this. Now, if you notice, Dennis says imbalance. No, I don't know what you mean by that. What you need is buyers. Everybody's saying that. Buyers. You know what's so funny? Not one of you said support levels. Do you notice that? Wow. You're always looking for support, but you didn't say support. You are all saying buyers, right? Now, Chip is saying you need a green bar. What does that mean? A green bar? You mean you got to have the stock that's going to close higher than where it opened to get a green bar? That's what you need? That doesn't make any sense. Green bars is the past. What you're looking for is buyers. So let's go hop over here and check out Book Viewer. Now, as we work our way down from 1687, you got 300 shares, 100, 100, 1800. Holy crap. You got it. Almost 100,000 shares looking to be bought right there at 1650. 20 orders around the world make up that order. That's a lot of shares. That's not a joke. That's a lot. So when you think about it, what do you think is going to happen when the stock gets to 1680? What do you guys think? Congratulations, you just figured it out. In theory, it should go up. Because remember, you need buyers. You want to know where the buyers are. Where the buyers located? On the bid. You're working your way down the bid, and that's where you see the most significant shares looking to be bought. So guess what? When we change the slide, look what happened. It went all the way down, right to 1650, and shot right back up to 1720. If you bought 1,000 shares of that stock, you bought at 1660, you sold 1720, you made yourself 60 cents in about an hour and a half, $600, maybe $150,000 salary a year. I'll take it. What's wrong with that? All about following the money. All right. You guys ready to do something backwards? We're going to make it even more interesting. We're not even going to look at some chart or anything else, but we're going to go right to the Book Viewer. Where do you guys think resistance levels are going to be on Snapchat? Let's see how you guys answer this question. Where do you think resistance levels would be on Snapchat? Now, remember, resistance, if it's going up, that means you're looking for sellers. The sellers are on the right. Where do you see the most significant amount of sellers out there on the right-hand column? Well, you know what? Wendy, Dennis, Todd, Monty, Carlson, Pat, I can't even go through it. Mario, so many of you here. If you all said 45.36, congratulations, you are absolutely correct. So in theory, if I own the stock right now, I would basically be like, I would be very nervous because my 1,000 shares are going to do crap to that 49,000 right there. Okay. So that's where we're at. So looking at this Snapchat chart, what does it look like it's doing? What does Snapchat look like it's doing right here? Going up or down? Wow, look at that. Everybody's saying it's going up. And you know what? You're right. The chart says it's going up. But we always know there's going to be resistance levels. You can't see it here. And guess what? If you didn't have a game plan, look what happened. It ran right to that 45.36, hit that guy, and came right back down to 44. You see, fellow traders, did you ever feel like somebody's watching you and like every time you buy it, the damn thing goes down, and every time you sell it, you know, the thing goes up? Does it ever happen to anybody? I always like to bring that up in my events, but we always have new people and I always like to share it. It's like sometimes you're like, why am I always, can't I once get it right there at support levels? All the time, Pat. Every day it happens to you, Dave. Z, happens more times than others. Trying to figure out. Okay, so can I be honest with you? Nobody's watching you, okay? You know what the problem is? You're not watching them. That's your problem. If you were watching them, it probably would make things a little bit easier for you. So, and by seeing that, no wonder why the stock came down. That guy has a lot of shares to sell. That's called program trading. Okay. These people got limit orders. And by the way, yes, those are real orders. Those are not fake orders. And remember, at the end of this presentation, I told you every single one of you are going to come into my trading room and we're going to see these orders. And if you don't believe it, guess what? We'll use your money. We'll execute it. If I'm wrong, you can go out there and you could bash me. If I'm right, you're going to be stuck with several $1 million worth of stock. You want to take that bet? We'll see how that works out. Now here, what we do is we call them iceberg orders. That's basically what they are. And I came up with that word about 20 years ago after watching the movie Titanic. And we all know what happened to Titanic. So anyway, it's not what's on top of the water, it's what's on the bottom of the water. And if you don't have the right tools and the right radar, guess what? Didn't work out too well for the Titanic. You need to look out and know where these icebergs are. You got to be very aware. You got to know, listen, you got a lot of money that's laying out. You don't want to sit there and sink. And that's what you have to look for. So next question we're going to get to is, some people always ask me, hey, I heard these are fake orders. How do we know they're real? Like I told you, when you all come into my trading room, I'll find a nice 100,000 share order and we'll go out there, we'll use your money and we'll see how that works out. Now, first of all, they're all real orders. You can't put an order out there. You can't put a fake order out there. There's no such thing. Just, it can't happen. So when it comes to that, there is something that's going to confirm to let you know if they're real or fake. So when you look over here, I'm actually known as a tape reader. Okay. I know Tom Sosnoff also was a tape reader. We all learned how to be tape readers, being market makers. So basically, we're just reading the tape. We're looking at where the orders are going. How do we look at the orders? We use something called time and sales window. Now, that window right there tells us if the transactions are taking place. Red means transactions are going off on the bid. Red means transactions are going off on the offer. So when you look at a stock like this one right here, hold on, right here, we're looking at Workhorse, okay? And you could see there's a big block order out here at 1850, right there for 100,000 shares. Big iceberg order. Now look at this, people selling 200,000, 2,000. That's a lot of orders out there. There's 30 people that make up that 100,000. So in theory, if I own this stock, I'm going to be like, damn, I got to get out before that guy gets out, because that's a pretty block order. Now, guess what? Somebody could buy that. And how do we know that? Look at the time in sales. 1850, 5,000, 3,000, 2,000, 4,400, 1,300, 1,000, 4,500. Look, green. What that means that somebody, that's the tape, that's a time of a sale, meaning somebody went out there and executed that seller. And those are the transactions that confirm it. And traders, cyber traders that are in my room, you know this. We saw it today. We saw that stock and PLTR, and we saw that big iceberg order. I'm like, look, that guy's getting executed. That's our next resistance. We say, oh, next resistance 1850. We're on the stock at $18, and like, okay, let's get ready for 18, and then 1850, and all of a sudden the guy's getting done, and like, boom, guess what? Next resistance 19, and guess what? It goes there. Because without those sellers, there's nothing to stop it from going higher. You need those big block orders. And then if that guy gets done, it's going to go higher than that. It's all about following the money. You see, my mentors, my main mentor, Frank Farrar, always taught me, he says, Fausto, you want to make money in this business? You better think you don't know anything about the market, because if you think you can outsmart these guys, you're going to lose every time. You can't take things personal, and you can't think you're smarter than them. If you do, you're going to lose. Follow the money. You're not trading 100,000 shares. They are. It's all you have to do. So with that said, ladies and gentlemen, I want to wrap this up, because I want to invite every one of you to come into my trading room. I want you to see this stuff. I want you to see how we buy and how we sell. And most importantly, I don't want you to judge us on our winners. I want you to judge us on the losers, because what we do here, we don't teach how to make money. We teach how to stop losing it. Once you learn how to stop losing money, that's how you learn how to make money in trading. So, but every one of you, I want you to understand, you need a mentor to do this, because let me tell you, trading is a great job. You know, how many of you are here retired? How many times do you want to spend more time with your kids? Maybe pay for their college tuition. Maybe go out there and pay for a vacation. Maybe go out there and buy that nice car you always want, or go on that vacation. Well, now we can't. So let's maybe go put an extension on the house. You know what I mean? But now is your opportunity to do it. If you heard me say with Tom earlier, everybody wants to get into the trading business. They're seeing this great volatility that's going on. And like, well, why can't I do it? Well, you can't unless you're part of a team and someone's going to teach you first, because trading is a very big failure rate. And that's why we love teaching people, and we have a passion to do this. So you'll be able to do the things you always wanted to do. So listen, CyberTrading University, for some of you who don't know this, we've been in business for over 25 years. We're one of the oldest, longest running schools in the industry. We are endorsed by more brokerage firms than anyone in the industry. And we're very proud of that. Tom Sosnoff doesn't come on very frequently on any educational school. Okay. He wouldn't put his reputation on the line. Okay. He does it because we're not only that. And listen, I got good friends, but I wouldn't do business with them. But I have the best of both worlds with him, because he knows that there's a lot of people that want to learn what I do. And there's no better person to teach you that than you coming here. And you know what? There's no better person that I would recommend to teach you options than would be him. But a lot of these brokerage firms, they have a big compliance department. Trust me, they do their homework. They would never have me speak on their behalf if I was teaching people how to lose money. They want you to learn how to stop losing it, because they'll have you for a client forever. So this is what we're going to do, everybody. Everybody here, I'm going to invite you to come into my trading room. It's the original one that I started. You're seeing a lot of them pop up all over the place. Okay. Where'd you think they learn it? A lot of them are my students. A lot of them are my instructors. But if you want to come to the original one, here's your opportunity. You ever heard of Buffalo Wings? Anybody heard of Buffalo Wings? Of course you heard about Buffalo Wings. Well, you ever been to the original in Buffalo, New York, Anchor Bar? You know, now they're all over the place. If you ever get the opportunity, listen, wings are great to try every place else. But sometimes if you go to the original, you'll know why and appreciate it, why as good they are and how they started. But this is my point is, you want to have the original cheesecake, New York cheesecake, the original. I'm a big foodie. That's why. Come here and join the original Cyber Group room and see what we do at 8 o'clock in the morning, Eastern time, all the way up until 5 o'clock in the afternoon. And by the way, we don't trade all day. We only trade an hour a day. That's it. First hour, last hour. Now, this is the deal. $9. That's it. It costs $9 to get in the room. We charge $9 specifically because we want to know if you're a real person or not. We don't invite anybody in the room because a lot of people don't qualify. But there's a lot of stuff you're going to be getting for $9. You're going to get the live trading room, 3 daily market meetings, a morning and afternoon watch list, a personal education advisor, a weekly live session, 100 hours of recordings, and a crash course on day trading. And as a bonus, if you register right now, I will even give you a free coaching class. Now, what is the purpose of why would Fausto, like people always ask me, and I always say this, why would Fausto want to talk to me for $9? Are you serious? Well, guess what? The $9 is an application fee. We just need to know if you say who you are. And the only way we're going to know it is that if you can't afford $9, you really can't afford to trade. Okay. It's just more of an entry fee to get in there. And then you know what? After a week, you go in the trading room. If you don't like it, I'll give you $9 back. Honestly, I really need $9. With the whole $15 an hour thing here in New York, it costs me more money just for you to pick up the phone and talk to my staff. But I'm looking for people I can make thousands of dollars with. That's what I'm looking for. If you think you have it in you, that you always wanted to trade, or you've been doing it, you're not being very successful, or you're doing another industry, why don't you try something different? Why don't you come and see our students, see if they're successful, see how they're doing, see the professionalism, the customer service, all that, and then we'll go from there. So let's take it one step at a time, and let's try to trade it. And like I said, you have nothing to lose. other than $9. Now, very important. When you register, there is going to be a questionnaire at the end of after it. We need to know a little bit about you. Okay. And let me be honest with you. Don't be offended. But some of you, we're going to just give your money back because you have more of an opportunity to get yourself in trouble as a trader than someone just telling you the truth and say, hey, listen, it's just not for you. Okay. Here at CyberTrading University, you're going to notice you're not going to go into a room with 1,000 traders. First of all, you can't make money with 1,000 traders. It's just chaos. You know, all they're looking to do, these people, is make subscriptions. Are you want to be with a company that's trying to make a subscription on you, or are you looking for somebody that wants you to join their team? And that's what I'm looking for. So go out there. You got nothing to lose. $9. Come in the trading room for a week. You could start tomorrow. Okay. Or if you can't make it tomorrow, just talk to education advisor when you want to turn it on, and we'll start it right before then. All right. So anybody have any questions in the meantime? Dennis has a good question. Fausto, what's the amount of risk capital do you need? Dennis, listen, you know how much money you need? $9. Okay. That's it. $9. That's what you have to risk. That's it. $9. Don't worry about, I know where you're going with this. That's the least of your problems. And that's a misconception if people ever tell you that. Don't worry about that right now. Why don't you find out if you like the art of trading, if you have a good company you could trade with, and then we'll figure it out later. Okay. Jake, you signed up. Well, thank you very much, Jake. I look forward to teaching you. More importantly, be part of the team. Just remember, there's only 20 seats open that I can only do. I only could do a coaching. I only have X amount of days, hours to spend to talk to people. But if you were not the top 20, listen, there's over 200 people in here, 300 were in here. You could still be able to talk to one of my instructors, but times obviously, is very limited for the week. Level 3 for NASDAQ book. Okay. So Joe, when I personally don't want you to buy the book viewer, please. I know it's $15, but let me at least show you for $9. It's actually cheaper to pay $9 and see you using it and showing you what's going on than you going out there and buying on your own. Okay. Chip, if you continue after a week, it's $149 a month. And by the way, if we're not going to make you run hoops and this and that, if you don't want to continue, you don't have to continue. Okay. A couple of shout outs here. Got a couple of people just registered. Who you got? Oh, there we go. My phone died, so I had to reboot. I don't know what's up with these iPhones. But Sheila from Wisconsin just got your registration. Mike from California got your registration. Lewis from Florida got your registration. Let me see a couple of questions here. I have already paid, but I have been able to start. I don't have the right equipment. What kind of a Mac or PC should it work? Now, we use a company called Trading Computers. If you go on our website, right on the homepage, you could actually you could talk to them. But I would just stick with a PC. Macs are very tricky sometimes. Some computers are not really compatible. But, computers are so cheap today. We really got to worry about? Make sure you get enough monitors. Buy yourself nice 24-inch, 27-inch monitors. That's what I would focus on. Okay. Any other questions here? Let me see. You're more than welcome. You're more than welcome. Now, guys, listen, like I said, it's $9. You got nothing to lose. Come in the trading room. I know some of you are not day traders, but we do swing trading and options trading in there. And you know what? If you want to be a good swing trader, you want to be a good options trader, you got to know what's happening over the course of the day. Like I was talking to Tom, we were trading NEO for months already. But that's only like one of several. Actually, NEO is pretty volatile, very dangerous to trade. Actually, there are a lot of the stocks out there were a lot less riskier. Riot was very cheap. One of you asking me about account balance. I don't know. It was only $4 2 days ago. Okay, now it went to 6, went $2 in one day. If you bought 1,000 shares, you bought it this morning, you sold this afternoon, $2,000, you're talking about a $500,000 salary, But to see people doing it every day, this is your opportunity to do it. All right. All right, guys. So listen, thank you so much for being here. I know it's a long day, and it's a long day for me too, but I hope you learned a lot. And before you go, we're going to play the video really quick of NASDAQ Book Viewer of me on NASDAQ. So as you guys are registering, you could have some fun and, watch a 10-minute video of me doing a presentation, learn a little bit more about Book Viewer. But remember, very important, when you register, you're going to notice on your dashboard, your portal page, you're going to have an education advisor. You got to set up an appointment with him. He's going to walk you through, because you're in the trading room, because you're going to be completely lost. You think you know what you're doing. Trust me, 95% of you have no clue what you're getting into. And you're going to be shocked that you're going to wish, you're going to say, damn, I wish I knew how to, I came here before I did my first trade. You're going to see that there are so many stocks out there that you shouldn't have been in the first place. And you're going to meet so many great, wonderful people that want you to succeed too. Because if you make money, they make money. Because we work together like a team. We talk together. We show you how to, sync with everybody, the camaraderie, the action, the excitement, the glory. And we lose together, which is okay too, because everybody loses, So that's the beauty of it. But thank you very much, everybody. And I'd like to thank the staff and thank Tom Soft once again to be here. And once again, make sure $9, fill out that questionnaire. Make sure you book your appointment sooner than later. And also last but not least, do not buy anything we trade. You're there just to watch. Okay. Watch and see how we get in and out of positions, how we use NASDAQ total view. And crap, I didn't tell you this. Wait till we show you level 4. When you see that, you're going to fall off your chair. You're going to say, my God, how does anybody could even have a possibility, chance of being successful without being part of this? And you're going to see that. I'm going to prove it to you. And then, like I said, if you're not happy, $9 go back to you. In the meantime, thank you very much for being here. And just always remember, you have to learn before you can earn. The cheapest trade you're going to make is getting yourself educated. All right, guys. Happy trading, everyone. Be safe. Enjoy your Thanksgiving and happy holidays. See you all in the trading room.
Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, New York City, we have Fausto Pugliese. He's the founder and president of Cybertrading University. We're going to take a look at how traders are using Total View. And Fausto, it could not be a better time to have you in with us at Marketplace, because with everything going on, the volatility we've seen in the market since you were with us in the middle of February last time.
That was pretty crazy.
Traders are asking themselves, what's the bottom, what's the top? But as a day trader, you can kind of get an inside look when you're looking at a single stock.
Yeah, what is, Jill, is that, thanks for having me again. And yes, when it comes to day trading, people realize that what happens over the course of the day, which trickles down to a swing trade and to a long-term investment. And my phone's been blowing up. People could ask me, Faust, is this the bottom? Is this the bottom? Because we're looking at the market all day. And honestly, this is how you really know when it's the bottom. When you have the worst of the worst of the worst news and just constantly all negative stuff, and the market's not going any lower, that's when you know it's time to buy. So as you see, like, a lot of bad news keeps coming up, and then obviously you saw what happened yesterday when they lowered the Fed rate by a half. It took for a big decline, and all of a sudden the market's up with about almost like 900 points so far. So and there's still a lot of bad news that's coming out with the coronavirus and everything else, but that's really when you know when you hit the bottom. So for some of the listeners out there that really missed the boat when the market had a big rally, you almost hit 30,000. These are the opportunities. Honestly, it is like the same thing I saw back in 2008 when we had the financial crisis. So once you start seeing all the bad news, things start backing up, start going up.
All right, let's take a look at our example here today. We're going to look at ticker, of course.
How it works, how to know where the buyers and sellers are. It's all about supply and demand. That's why it's such a great tool. So we're looking at a chart right here, and we're looking at the stock right here. And the first thing people notice is, like, the stock's going up beautifully. Nice. Look at the stock. Started this morning. It's at 25.80. It's at 28. Is it going higher? Now the goal is, Why does the stock keep breaking out? It hits a resistance, it comes back down. It breaks the previous resistance, keeps going up. How do you know it's going to keep breaking higher highs? And what we're going to do this time is we're going to bring a video so you all could see exactly what it's like to see in the real market conditions.
All right, so let's move along to our next slide here. That's exactly what we're doing. Let's take a look at total view. I'm going to let you take the reins. Tell us what's happening here.
Okay, so we got like a little minute video here. So we're looking at some real time. The key here is time and sales. These are the transactions that are taking place. We're looking at level 2. Level 2 is basically people get for free, but it doesn't give you the depth of data as total view does. Now, the key here is that you don't see that many sellers out there. You're just seeing the best bid and best offer of that exchange. But you'll notice how the stock keeps going higher. What we need to focus on is where you see the big sellers. And you're looking for big orders. You got 51 different orders out there, right around 28. Things are going so quickly, I try to slow it down. So right around $28, $28.50. So that is really your resistance level. So when you're looking at a stock going out, going higher, you're going to say, is the stock going to break out? So you see it's coming up to this guy right here really quickly. You see it's coming up. It's coming up to this person right here. So 70,000 shares, 5,000 shares. So it's going to come up to that seller. Now the goal is this. Is that guy going to get executed? Remember, you have 100 share sellers, 300 shares, 1,000. But you have a big order out there. You want to see if that guy gets executed, and you want to see if that's how it breaks out. Remember, what makes support and resistance levels is buyers and sellers. So you got a seller out there. So we're coming up to that seller right here. Now the goal is to look right here and see if that seller gets executed. And you see it's coming up to the seller, and boom, the guy gets taken out. It's actually executing it. Boom, 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 boom. Look at that. See all those trades actions? It took the guy out. Now look how fast the stock goes up. From 250, we're at 260, 270, 280, boom, like that, as quickly as that. That's why it's so important to know where the orders are, know where the resistance, and see if the guy gets taken out. Now, when we get to the next slide, look at it. We're already at 2880.
Yep, and you can see you start to see these 35,000
Which
orders.
is, exactly. Now, this is the next order. Now, the next question is, here's the next biggest resistance. There's a 33,000 shares. There's 100 different orders out there. Now, then that's where the next resistance level is. So the goal is you hit a resistance, where's the next resistance? The next resistance is the next biggest seller. So now we're coming up to him, and we're going to see what's going to happen when he gets to 29.
Yeah, it happens so fast.
Well, also, this is about a 5-minute video that I was able to capture when we traded this stock, and I kind of speeded it up over about a minute, so it doesn't move as quickly. Boom, we hit 29, the guy got taken out again, and look at the stock just took off again. And the thing I want to explain to you, Jill, is that, and your listeners have to understand, is that when you have a big seller out there and that guy gets taken out, that is a very big demand. Someone says, oh, wow, I'll take that 30,000 shares, and that's why you get the stock that really, really starts to take off. Now, the next thing is that you're going to get some resistance levels. It's going to start backing off. There's always profit taking going on, right?
Of course.
So when you have profit taking going on, you can see profit taking going on, but the question is it really a profit taking, or is it just people or is it really going to go lower? In this case, it's not. Seller got done. Remember, we just watched the stock go from 28 to 29. Now look at it. We're at 29.50 already. Stock just keeps going higher and higher because those sellers are getting executed. As those sellers get executed, that means there's a demand for it. When you see big block orders out there, it makes a bigger demand, and that makes it higher. Now, the next resistance level, obviously, is going to be where we have to focus on, where the next biggest orders are. So we got some, I think we freeze, right? We're done?
Nope, we have a little bit more to go here.
We slow down over here. Yep, we're done. So the next video we're going to show.
You can actually go to our slide here, so this is where you're looking at those levels.
Right, so we're looking at the seller. So we have a 67,000 share seller at 28. So now we have to look what we call iceberg orders.
What does that mean?
Okay. So it's a funny story. So I came up with this word about 20 years ago after watching the movie The Titanic. Okay. If you watch that movie, very sad movie. I definitely recommend it. So anyway, what happened to Titanic? It hit an iceberg. And the thing is, everybody was focused on the pretty of the ship and above the water. They didn't realize it's not what's above the water, it's at the bottom of the water. Icebergs are really big. So what happened, it crashed and it sunk. So what we're looking for is big iceberg orders, which some people call them big block orders, but when you see a big order, it's called an iceberg order. So now we're looking at a 28.90, and we're looking for a resistance. Once again, stock's going higher. We need to focus on the next resistance level.
All right, and which is on the next chart here. If we take a look, yep.
So here's just a quick little screenshot. So as we're looking at it, you see, it's a lot easier when you're focusing on, when you're just looking at the level, the total view, and it's easy to point it out. Now, please keep in mind, your listeners have to understand, we're fast forwarding this pretty quickly to get to the point. It doesn't move this quickly. But I'm showing right here is just a quick screenshot. What we're focusing on is this big order right here for 73,000 shares, and there's 315 different orders out there making up that 73,000. Now, the thing I just want to point out is I just want to teach everyone a quick little lesson.
Yeah.
Don't ever sell anything at $30. Go out at $29.99. You just cut the line by.
So that's for anything that's at an even number.
Biggest trick I was taught by my mentors when I was younger. Listen, everybody's going to think 30. Everybody's going to think 20. Go out $21.99. You just cut the line by 73,000 shares. That's a very good.
It's like selling a house or buying a house. It's like those incremental psychological levels.
Well, if you remember, if you look at it, the stock has a penny intervals. And so that's a little tip. But the thing is, let's focus what happens to the 30. No, just right off the bat, you know that's a major resistance levels, and that's what we have to focus on. That's for the stock to go any higher, it's got to get through that 73,000 share seller on total view.
All right, well, let's take a look at that next slide. See what happens next. Now we're going to get the other piece of the trade.
Okay, so here we're looking at the stock moving. Here's 29.45, 29.48, 62, 67. So the sellers are getting executed. You can see the transactions taking place, but we know that there's that guy sitting right here. And now his order's coming up. Look, he's starting making up the ranking. It's getting up to 30. It's getting close to him. So let's watch what happens. 74, 70. Look at the transactions taking place. It's trying to get there. And by the way, those orders, they're all real. People think like they're fake. Those are real orders. Can a guy cancel it? Of course they can cancel it. But that you have to take very seriously, and that's a real order out there. So now as we're looking at it, and as it's trading, it's trying to get there. Actually, it kind of almost tested it. You see that right there?
Yep.
See that candle right there? It's hit it, and now it's starting to back off a little. Now you're starting to see the red candlesticks. So now it means that the last sale is lower than the previous.
And this works for all kinds of stocks. ETFs, would it work for ETFs also?
ETFs, futures, options, it works the same way. Remember, it's the movement of the stock that makes all those other things. Yes,
Right.
ETFs and everything else. You could look up any ETF, and it'll come up on Total View. Look, now we're down to 29.
Yep.
So my point that I'm getting to is this. If you didn't have a game plan, Jill, and didn't know that seller was out there, and you try to
And actually, if we go to the next slide, this is exactly what you were talking about. There's your level right there.
if you didn't have a game plan and knew that seller was out there, and look at that candle, that stock literally moved. Look how fast it moved in that one bar chart. If you didn't have a game plan to get out there before that guy was out there, and if you didn't what we call shaving, if you didn't shave just before that 30 and cut that line, guess what? You would just look how much money you would have lost. That stock didn't even drop from 30. Look where it went to. 27.30. You would have got crushed on that trade. Because what happens, if that seller's out there and he's not getting executed, he really had to sell that order, Jill. How is he going to get out? He's got to sell to the buyers. If he hits the bid, he's running that stock down, not you and I. Remember, we're not trading 74,000. Someone else is, and it's not one person. We saw it. It was like there was several people out there doing it. And that's how you got to focus on using the total view when you trade in today's volatile markets.
All right, so cool to actually watch it happen in real time. Thanks so much for doing that for us, Fausto. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.